you, and over to you, sir.
Thank you, Margaret. Good afternoon, ladies and gentlemen, and thank you for joining us on this call at this very short notice. These are unusual times, and I just hope that you and all your family and your close ones are well, healthy, and safe. Before proceeding with today or last night's developments, I would like to introduce my other colleagues who are with me on this call. So let me start with Prashant Tripathi, Managing Director and CEO of Max Life. There's Amrit Singh, who's the Head of Strategy for Max Life, and Jatin Khanna, Chief Financial Officer for Max Financial Services. This is indeed a landmark day for us. This call really is to discuss the notable developments which we think will reshape the future prospects of Max Life with Max Financial Services and our incoming JV partners, Axis Bank, who have been partners with us for almost a decade. But this is a partnership which has been stitched together, and it augurs well for the company, and it is going to be a long-term joint venture relationship. Max Life, as we've all seen through the years, has been the best performing life insurer when we see it on a holistic level, whether it is in terms of the balance for its growth, its profitability, and the sustainability of being product agnostic. However, it is well known, and we have kind of discussed this in the past, that if there was one weakness in the company, and that was to do with the fact that there was an over-dependence on Axis Bank and the relationship, even though it is currently on, comes in for a renewal in 21-22. And so the question in the minds of investors, analysts was, what happens then? I think with this deal, those questions are now to be left behind. We believe that this JV, which we have stitched together, is one which is going to be long-term. It takes away the fact that there was a lacuna in terms of our distribution, and there were ambiguity. All that is behind us now. So, as you all would have read, Axis Bank proposes to take 30% stake in Max Life, which is going to be a secondary transaction. With this transaction, it brings together the third largest private bank and the fourth largest private life insurer in the company. This joint venture should be mutually beneficial and endure a relationship between both our organizations. Like I mentioned, this addresses the uncertainty and brings in the needed stability to a long-term strategic partnership. It should significantly improve Max Life's competitive position vis-a-vis its competitors, including the other large banks, which I might tell you are owned. These are owned by the private life insurance companies are owned by large banks. This should unlock value for MFS shareholders, given our long-standing, high-performing business and the partnership with Axis. Some features on the deal. The name remains the same, which is Max Life Insurance. However, there would be a tagline which would include the Axis Bank logo, and this will further enhance the customer trust in the brand and highlight the strength of the partnership. Axis Bank and Max Life have had a successful business relationship since over a decade, providing long-term savings and protection to over 90 lakh customers. The total premium generated through this relationship has aggregated over 38,000 crores. Both have invested extensively in product and need-based sales training, thereby leading to consistent increase in productivity. So much so that Axis Bank was the best performing bank insurance player from amongst the large banks in a month that was marked by significant headwinds. All things being equal, we expect the transaction to be completed within the current calendar year. This is, however, subject to all the regulatory approval. The definitive agreements provide for certain rights, and these are as follows. There are governance rights with 4 directors for Max Financial Services in existing Max Life and 3 for Axis. Some of that will readjust as the eventual shareholding gets changed once the contemplated merger is implemented. The endeavor will be to initiate the merger process by middle of next year, though we have around 5 years to implement the same. Axis Bank has an alternative liquidity option through the swap up to Max Financial Services if, for someone whose foreseen reason, merger is not implemented. There is also a put option in 7 years if both do not happen. However, that's a remote probability event, but we will address some of the questions around the same as we go through the call. Before I hand over the call to the moderator, I would like to thank the entire Axis team and welcome them into our JV. I want to thank the team which has worked relentlessly, and I tell you, they have been nothing short of being absolutely professional. I also want to thank our existing joint venture partner, which is Mitsui Sumitomo, who have always been very, very supportive of the transactions we do. And lastly, my team in Max Corporate, who have worked tirelessly to make this thing happen. So to sum up, Max Life will continue on its trajectory of driving strong shareholder outcomes with Axis as a new JV partner. This partnership with Axis having been strengthened and the Yes Bank assurance being renewed for another 5 years, significant investments in proprietary and digital channels, razor-sharp focus on cost, and significant improvement in protection mix, we are progressing well despite the current challenges. On that note, I would like to hand it over back to the moderator and open the floor for questions and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manoj Baheti from Carnelian Capital. Please go ahead.
Hi, thanks for taking my question. First of all, let me congratulate the entire management team of Max as well as Axis for moving ahead in long pending strategic deal. So my first question is like if you can elaborate a little bit on the put option. In fact, this 295 rupees per share into 55 crores gives some like 16,000 crore kind of number. So means what am I reading wrong here?
If I can just start on this. Yes, there is a put option, but if you see the waterfall, this is a event which is absolutely somewhat remote because the first thing we're planning to do is a merger. During which there is a swap which has been contemplated. And thereafter there is a put option. Now, this is you must look at it as an event which is a low probability, but if you want to know the details of the numbers, maybe Jatin, if you could take that question please.
Yeah, sure. So I think Mohit has made some very important sort of comments. I'll sort of drill a little deeper into that. So firstly, the idea, from a Max Financial and Axis Bank partnership standpoint is that, we have to go through this merger. Now, we've had, the structure for precisely the reason, why we are here today. Now, having, sort of accomplished that, now I think it's a matter of time, which is, I would say, maybe at best, maybe next 12 months or so, or maybe 12 to 18 months, I'd rather say, because this transaction itself may take about 12 months to complete. So I think we are looking at, in the next 12 to 18 months to progress with that merger. So therefore, the genesis and the basis of this transaction is merger. So that is one thing which I want to just say, so that it's very clear. And we are not looking at getting into any other option but the merger. Now, there have been questions in the past, around merger and, this whole uncertainty, because some people have, spoken about this telecom liability which people keep bringing up, how will this get sorted and, what's the certainty around merger. So I wanted to use the opportunity at this forum to say that we have decided to sort out the telecom liability in the tax amnesty scheme which is on. So practically, what that means is that the only roadblock which could have potentially come in the way of the merger gets cleared. So at this stage, we do not anticipate any challenges with the merger. Now, obviously, the merger is a regulatory process, so nobody can say, with 100% certainty it will go through. Therefore, but however, if you were to look at it from an Axis Bank standpoint, from their standpoint, obviously, if they're coming in as a JV partner, it's also important that that JV has liquidity event at some stage. Now, in that liquidity event, if the merger doesn't go through for whatever reason, which we obviously are, do not anticipate at this stage, otherwise, one wouldn't have gone through the structure. So there is an alternate provided to do the share swap, like we have done for Mitsui. Now, or we are in the process of doing for Mitsui. So, therefore, frankly, we don't see anything beyond these two steps. Is point number one. And therefore, this whole put option is a very remote liability event from our perspective. So that is one thing which you must take away from this call. The second thing which you should also take away from this call is that when somebody walks into a joint venture relationship, and if you were to look at a press release, you will see that there is some 7-year proximity timeline to the put option. And that's really the period of time which we have with us to either deliver the merger or the share swap. And obviously of these 7 years, first 5 years are for the merger. So practically, we don't see a reason why this merger cannot be done in 5 years, because when I said that we can be filing for the merger in 12 to 18 months from now. Now you have to look at it from a different perspective to say that, Axis Bank has come in here as a joint venture partner. Obviously, they haven't come in here as a partner seeking an exit in 7 years. Because no partner will walk into a relationship and want a midway exit. Because this company has done well, continues to do well, and now you think about, where this company can be, with the current management team, which has done a spectacular job, also supplemented by both Amitabh Chaudhary as well as Naveen Kalyani, who both been in the life insurance industry and have seen this business closely. This combination will put this company in a different orbit. Now, if we are in that situation, and from an Axis Bank standpoint, liquidity event, as they desired has not happened, but the company is doing well, and there is long rope still left from a joint venture partnership standpoint, and so we see no reason for them to exercise this put option itself. from that standpoint as well, because practically, I'm sure, you'll all value this relationship in Axis Bank's stock, which then will pretty much, take away any reason for them to even think of a midway, liquidity event. However, at the same time, when you get into any partnership, you obviously, have a liquidity desire at some stage, not to exit, but to be in a liquid position. So to that extent, you will always put those conditions to say that, okay, what if it doesn't happen? What if I don't want to continue? And therefore, to protect those what if scenarios, you will put several events. So this is that one of the what if scenarios. But again, like I said, an extremely remote probability event. So my, on behalf of both Max Financial and Axis Bank, submission is that this partnership is with the intent to merge this company, and therefore merger is really the option we will be working towards. And frankly, you should be focused on that and nothing else.
If I may add two more things. One is, the fact that they're coming at a 30% stake. I leave it to the best judgment of, people on the call, and it is for you to infer, how long this arrangement is going to continue. There will be future announcements, which we will make periodically. So that's point number one. And the second is the amnesty scheme which Jatin spoke about. Last night, we also took an enabling resolution from our board, so we got that cleared as well. And as soon as the lockdown gets over, we want to be the first company in the jurisdiction of Punjab to go in for the amnesty scheme.
And just to add to what Mohit just said, the certainty of the tax amnesty scheme is so much so that we have actually already filed the formal application with the department, which is the online filing and liability crystallization. Everything has happened. Now the only thing is that, the day they open up, we will pretty much, they should be approving it and we should be sort of getting on with it. So therefore, practically, before committing for this merger, we've also made sure that we've cleared all the roadblocks to the merger. So that's our position at this stage.
Okay, thanks for this explanation. I'll make a couple of more questions. First one is, initial part of the call I might have missed, have you mentioned that what is the money which Axis Bank is paying for this 30% stake? Has that been formed up or still it is open?
Yeah, sure. So, it's okay. So now, whether the money is formed up, answer is no. Whether the mechanism or formula for this money has been formed up, answer is yes.
Okay.
So what that means is that there is a, under the Income Tax Act, there is a valuation methodology called Rule 11 UA. Now, that Rule 11 UA practically is a tax-adjusted book value, and that's the basis of our transaction. And to that extent, the reason why that number is missing at this stage is because the tax book value has to be ascertained at the time of closing and not today. So it was pointless, frankly, to put a number there because that number is subject to change. And that's why we haven't at this stage put the number. But the methodology for ascertaining that number is pretty crystal clear.
Okay. And next year payout will be close to 800 crores for residual 5% stake, which you might have to buy out at a future date, right?
Yes, it's about, I think, 840 crores to be precise. And so that you are seeing some numbers and all that being floated around in the press, but obviously I can't confirm or deny those numbers because I don't know whether what the number will be at that stage. But practically, this number is nothing as compared to the number which we will get on the stake sale. So to that extent, this Mitsui Sumitomo acquisition liability is fully provisioned for in our assessment when we actually went ahead with this transaction.
And this transaction will be at holdco level, right? Max Financial will receive money from Axis and they will pay to Mitsui, right?
Absolutely right.
It's a secondary transaction which will be taking place.
Okay. And lastly, the final stake in life, once all these things get concluded, will be around 69 to 70% will be held by the listed company and 30% by Axis, right?
Yeah, it is 70 and 30, so it's not around, it's exact 70-30.
Okay. Some stake is there with employees and all also, that also will get subsumed, right?
No, the employees have phantom stocks, they don't have ESOPs. So to that extent, there could be some few thousand shares from the past employees, but other than that, practically it's a 70% ownership.
Thank you. I would request Ms. Ganati to come back in queue for follow-up questions. And I would also request participants to please limit your questions to 2 at a time. Should you have a follow-up question, you may rejoin the queue. Thank you. The next question is from the line of Avinash Singh from SBI Cap Securities. Please go ahead.
Yeah, hi. A few questions. I believe that all the merger, if I make this, just pardon me, the merger you are mentioning is basically collapse of holdco and operating company structure. And associated with that, I mean, whatever amount you will be receiving, that is not certain from Axis side. But I assume that to be sufficient to sort of for Mitsui stake buyout as well as kind of your assessment of the tax amnesty payment you may have to make. And then finally, what kind of cost side efficiency you expect post this deal? Because, I mean, in the past you have certain mechanism to pay the commission and other benefit to Axis Bank, but that time Axis Bank did not have a direct equity interest buying the very small stake. Now they are becoming a strategic owner in that light. So does that mean that, okay, the cost structure is also going to subsequently improve meaningfully? Some color on that. Thank you.
I don't know what you mean by other mechanisms, because practically we've never had a mechanism, other than the regulatory possible compensation to be paid to Axis Bank. So I don't know what other mechanisms are being referred, and I'll rather refrain from commenting on something like that, because we are in a regulated industry. And what we pay and what we can pay is what's within the bounds of being regulatory compliant. Prashant, you want to add something?
I think it's best to kind of sequence out. I mean, I didn't hear the question very well, but I think he was probably wanting to know what the sequence would be. So the first part of it, as you know, we've already embarked upon the swapping of the Mitsui stake. So that process is currently on. And then there will be a residual stub, which is about 5% on which, we have about 12 months to effect that from the time that we get the approvals. Hopefully, in this interim period, the Axis transaction would have closed, at which time the monies would have come in. As Jatin mentioned, the monies would be more than significant for us to buy out the 5% stake. And the amnesty scheme we've talked about, that's a cleanup job which is happening. And the process for the merger will embark 12 months from now. And at that point in time, really there is no other gremlin, I would say, at the holding company, which will preclude the whole process of the merger. And I think the last part of the question was around compensation and remuneration, which Jatin has adequately addressed.
Yeah. Thank you.
Thank you.
Thank you. The next question is from the line of Dhaval Gara from DSP Mutual Fund. Please go ahead.
Hi, congrats on the transaction, at least the announcement, and I'm sorry I joined a little late. A couple of questions from my side. First is, what's the cost of the telecom liability settlement that you expect? And second is, what is the sort of medium-term plan of the promoter and Mitsui, given that combination, both of them together would hold more than 50%, and we know that Mr. Singh's pledge of share is one of the sort of agenda that he wants to sort of reduce the pledge, etc. So, what's the medium-term plan? Is there a strategic over a period of time? Any thought process on that?
Yeah. So, whilst we have approached the tax department formally, and the number really hasn't been crystallized, but we've got indications, and it's looking that it could be in the range of about 120 odd crores. We have the adequate liquidity available with us at the holding company to do that transaction. So that's your first question. With regards the second question, really, it's the question for the family, for the promoters. However, from what I know, and coming wearing my public hat, I think Aniljeet has made this disclosure in previous occasions that he is relentlessly targeting to reduce the pledge, and really there are two events. One, which you all may or may not know, is that we are almost at the cusp of completing our healthcare transaction. Unfortunately, because of a lockdown in Bombay, we haven't got our written order from NCLT, but that's expected shortly. And then there is a process of listing the healthcare company. The stake of Aniljeet in that company will be up for monetization. A mandate is already out. So that's the first step in terms of reducing his debt burden and by his pledge levels. He's also been fairly vocal about the fact that he would like to monetize some portion of his 28% currently held with him in Max Financial Services. And that is very much on the anvil. There have been a lot of interest which has been evinced in terms of, picking up that stake, but obviously, he has to really look at the right time and the right opportunity and maximize as much as he can, but that's very much on the part that there would be some small portion which would be monetized. And with a combination of both these events plus some assets which will be, which he's already started in terms of his asset sale reduction, the debt levels for him and consequently the pledge levels will improve significantly. And this deal really is a kind of a balance and augurs very well directionally in terms of what is contemplated there. I hope that kind of a both.
Right. And just lastly, we had this sort of transaction in the past with HDFC Life where we explored the collapse of the structure, and even at that point, I remember we had looked to sort of park the telecom liability in one of the other listed entities. So what has changed from then to now that makes you believe that we'll be able to collapse the structure, given that the amendment to the IRDA Act has also not played out? So just trying to understand what has changed from then to now.
It's a good question. One is time. I think, as time goes by, there are a lot of things which we need to kind of reflect upon. And, that's something which has happened. The second and significant item is what we just spoke about, which is this particular gremlin which is sitting there, right? It is not a clean holding company. And at that point in time, there was, if you recall, there was another structure which was being contemplated in order to cauterize this particular liability. So, we are fairly confident that, going through this amnesty scheme, cleaning up, the holding company with nothing else in there, this is a step in the right direction. Obviously, I can't give you a 100% guarantee on it, but directionally, I think this is the right approach.
Understood. Thanks a lot.
I may add to what Mohit just said. I think there is a significant difference between what we were trying to do earlier and what one would do in this situation. And let me explain you what the difference is. Earlier, Max Life was merging into Max Finance and then demerging into HDFC Life. Now, rightly or wrongly, the concern at that stage the regulator had was that, an insurance company is merging into an NBFC, and the comfort was that, the insurance company merging into an NBFC is not something which a regulator can approve. They were at best amenable to looking at something what RBI does, which is let's say, the reverse of it. So that is, I think, point number one, which is to say a bank can merge with an NBFC, but NBFC can, an NBFC can merge in a bank, but a bank cannot merge into an NBFC. So I think that is one big difference between the last situation and this situation. The second sort of big difference is that when you strip away all the assets and liabilities of Max Financial, and when you collapse Max Financial into Max Life through a reverse merger mechanism, then practically there is nothing which is changing in the insurance company, because neither the license moves anywhere, nor does any asset liability comes in the insurance company. All what happens is there is a change of shareholding which happens. So therefore, practically the regulator is approving only change of shareholding and nothing else when they are approving this transaction. So therefore, there are material differences between the two structures, which give us far more confidence that this is doable. And like I said in the previous, I think the first question, and when Mohit also sort of mentioned in his remarks, that it's not that our life is only dependent on the merger. We obviously have a swap option also, at least from a transaction standpoint, but of course from investor standpoint who've been invested in Max Financial, from their perspective, obviously the merger is desired, and as you can see, there is seriousness and steps being taken in that direction, because otherwise, we've discussed this in the past, that this tax liability is a frivolous case. However, despite all of that, one is going for a tax amnesty scheme to really clean up the liability. So therefore, all the right steps are being taken in that direction.
I think there's also, if I may come in here, there's also we need to kind of stand back a bit and take a more holistic view of why this marriage is really happening. I just want to remind all of you that not very long ago, there were aspirations from Axis Bank in terms of wanting to get into the insurance business, whether it was a greenfield or brownfield. These discussions obviously were had, a couple of years ago. So that aspiration of getting into the insurance space was, had been germinated well before. Now here is a clean path by which, you have a bank who has aspirations of playing in the insurance space, coming in as equal partners, jointly running the business, and with a CEO who has a wealth of experience in life insurance business, together with his COO, who also has wealth of experience with life insurance business. So if you were to really look at it, I think they're here for the long haul. And like we mentioned, that you need to have a few mitigants in place, because they are a board governed company, listed company, and it is but obvious that you need to have what's called an exit option, and that's really what has been contemplated here, is an exit option, not that it is necessarily going to be exercised by them.
Correct. Yeah. Thanks. Very useful. Thank you.
Thank you. Ladies and gentlemen, please limit your question to 2 at a time. The next question is from the line of Nitin Agarwal from Motilal Oswal Financial Services. Please go ahead.
Okay, thanks for the opportunity. My first question is, what is the dilution that MFS shareholders will see as MSI moves to the level? And the loss in Max Life shareholding be equal across all categories of shareholders to facilitate the team?
Yes. So I think your question is coming from the fact that is Mitsui Sumitomo participating in this dilution? If that's your question, so the answer to that is Mitsui Sumitomo swaps up is a precondition for this transaction to happen, and therefore till such time that precondition is achieved, there is practically this transaction won't progress. So to that extent, when they swap up, they automatically participate in the dilution. Now, obviously, just one more comment. Obviously, this COVID has impacted the stock price, and from a 600 level, it's now down to more like 470 level. But the shares which we are acquiring from Mitsui Sumitomo, we are practically acquiring at, let's say, a 440 rupees of Max Financial share price. So to that extent, when you look at it from relative to 600, even if you look at it from relative to 550, 525, the 440 already factors in that cost of dilution. Now 600 becoming 470 today is obviously an unpredictable event. So to that extent, what we are buying from them may or may not fully price this their participation to that extent. However, when the deal was structured and it was conceived, the cost of dilution was part of both, what we are buying out as well as what's being swapped.
Okay. So only the shares will be issued at the now MFS level to MSI. So that will be the only dilution to look at.
Correct, and therefore as they become shareholders of MFS, they automatically participate in the stake sale to Axis Bank.
Right. Okay. And secondly, suppose in a rare scenario, for some reason the deal couldn't go through, and Axis exits at a predetermined price of 294 per share, then will Axis stay on as a banker partner after such a long time? Because if it doesn't, then buying share at that price may be really expensive. I understand that that's a big outlier given all the explanation that you've given, but that's still a big factor to understand.
Like I said, whilst there is a put option at the end of 7 years and things like that, but I think I mentioned it and clarified it clearly that the way we look at it is that it's like a joint venture is like a marriage. Now, and Mohit also mentioned this point to say that they have come in here after the stated intent of getting into life insurance business for almost 2.5 years. We have been engaged with them to sort of make this work. So practically, it's like to say that a worst case scenario is not what a deal is predicated or premised on. So to that extent, we should not expect or assume a scenario wherein in middle of this relationship, practically, and also I think you have to look at it in a different way also, right? I mean, if the merger happens or the swap happens, Axis Bank will be the largest shareholder of Max Financial. So, and their shareholding will be disproportionately higher than anyone else. Now, when you are wanting to be in that position and when you come into a JV with all of that, then you don't walk in to sort of terminate that relationship.
And if I may add, let me also add another dimension to this. Today, as we speak, right, if you were to aggregate the quantum of fees which Axis would have earned from inception, we are talking about somewhere close to $1 billion, right?
Okay.
As we speak, and with current business levels, right, the numbers are between 800 to 900 crores per year and growing. Now you tell me, if there is this steady stream of fee income where you don't need to maintain capital, in a scenario where banks are always looking for, the fact that your risk-weighted averages and balance sheet management is a key focus, and if it is growing, right, why would one want to go and shake that beehive? You've got to look at it from that perspective as well.
Because you have to also think about, the magnitude of the performance of the bank at that stage. At that level of business volumes and at that level of,
Prashant, maybe you can come in here to kind of just give a feel or an indication in terms of what's the sort of, cumulative sales number that we're talking about, 5 years hence or 10 years hence or even 15 years hence.
Yeah, thank you. Thank you, Mohit. Really, without COVID, we were hoping that we would conclude with Axis Bank and individual adjusted sales about 2,700 crores. And I've seen them grow close to about 20% CAGR for many years. So I will hope that, they will continue to grow in that range for at least next 5-6 years, which will take, with a 20% growth, things double up every 3 years. So in 6 years' time, maybe 4 times of this, we'll be talking about close to about 10,000 crores of sales numbers, at a very high level. Also, coming back to, some of these, Mohit, some of the issues which are being discussed with respect to the possibilities, I'll just like to highlight that, by then we will have a precedent in terms of Mitsui Sumitomo going up, the swap taking place, right? And swap is a short thing. So when one constructs the deal, there are all kind of possibilities which get discussed. We all have done deals, which means what if this doesn't happen, what if that doesn't happen, but one needs to be focused about the probability of an event taking place. In my mind, first to the possibility of either a merger or a swap taking place is close to 100%, really. So I don't see the third event play out. However, there is always in deals you have these scenarios which are created. Now on 10,000 crore of sales numbers, it will be very, very large relationship, and the income stream that it will have will be very significant. At that point of time, these are exit barriers. So I will say, some of these scenarios are quite theoretical in nature, and I request all the investors as well as analysts to apply judgment in terms of assessing the risk in it.
Sure. Thank you. And one more data point question, like if you can provide some color on the tax liability that will arise if Axis were to swap its holding for Max Financial, as that liability is planned to be borne equally by both the parties. So how much can be the approximate range of that tax liability?
I think we reported that in our disclosure, didn't we?
No, so the concept is that we are sharing half. So obviously it will be a factor of the share price then. And I must say so that, the incentives are aligned there. So obviously, if the price at that point in time, depending on the price at that point in time, one would want to sort of time it such that, the liability for both the parties are minimized. Now, and while constructing this transaction, we've actually sort of thought through that and the mechanisms how we could possibly defray that liability over a period of time. For example, there's a part which obviously from the residual proceeds of this transaction which can be taken care of, and the other part, could be really very small, and it could potentially be defrayed over many, many years if you could just get it financed or something like that. So I don't anticipate, at this stage, that being a significant number, 6 years out, it will be sort of significantly lower relative to the overall, value of Max Life or the business.
Just to complement what Jatin is saying, the objective, while there is a 6 or 7 years which has been kept for the transaction or the first event to take place, this is like the outermost time. Like Jatin repeated a few times, as soon as, the transaction is consummated, we are going to begin with the first exercise of the merger. We'll know in some period of time whether the merger is happening or not. Post which, of course, there will be the event of swap. So in all, expectations, we'll be able to conclude one of the first two, much before the 6 years. And, the liability in terms of what you share 50-50 is actually time dependent. So it will be, in my expectation, much lower than how it will be 6 years from now.
Sure. Thank you so much. And best wishes for the team.
Thank you. Thank you.
Thank you.
Thank you. The next question from the line of Ajox Frederick from BNK Securities. Please go ahead.
Thanks for the opportunity, sir. So my question is really a repetition of an earlier question. The cost of running Max Financials, so basically how does that change from here?
That is an insignificant cost. I mean, frankly, we've like every corporate, sort of gone through cost rationalization, so re-engineering exercise over the past 12 months or so. And now the cost which we are looking at, for example, for this year, will be a sub 50 crore cost. And then on top of it, the proceeds which we get from this transaction, if they come in sometime during the year, the interest income will outweigh, take care of those costs. So I think, at least in our mind, we have moved away from that cost, being an area of concern for us, because frankly, in a company which is delivering about, say, 1,000 crore VNB, or thereabouts, 40-50 crore cost is nothing. And, as we look at it from a long-term perspective and overall scheme of things, it will be insignificant. I mean, today it's less than 5% of VNB, and value also comes from the indirect value of the business, as we all know.
Yeah.
So to that extent, it's a low single-digit number, if at all, in terms of the overall, valuation mathematics, as one would put out, and will become even insignificant over a period of time, because the cost ain't going to go up, whereas the VNB keeps multiplying with the business growth and the margin improvement which we keep delivering.
And as Jatin mentioned, there is of course the desire to merge both businesses. So once the merger gets over, anyway, there won't be a separate entity. That's, is number one for us to work through.
Till that, for the first 2 years, anyway, it's the JV which will be the focus, and after that it's the merger process. So, till that merger process is there, anyway, the same kind of run rate will continue. That's what you are expecting, right? At least on the cost side. Very mild cost, but yeah.
Yeah. I mean, sub 50 crore, I can say for sure. Unless it comes down even further, and like I said, you have to look at it on a net basis, because obviously, it's on a net basis with the corpus we'll have, with the other income flows which happen there. So practically, this number could be a zero or maybe a 10-20 crore negative number. So it's not a number which you need to really worry about now for the future, or in the foreseeable future.
Got it. So my next question is on the board. So how is the board, I've just read somewhere that one will be nominated by Axis but will be part of Max Life's board. So how does it work?
The way it works is that there are 4 directors which Max Financial will have on the Max Life board, and 3 directors Axis Bank will have on the Max Life board. Obviously, but board composition being what it is, it's a joint venture, and therefore, we will run it, and we will always want to run a JV in the spirit of equal partnership. So obviously, we will sort of co-create and practically sort of jointly drive Max Life. At a sort of like a performance or an operating level or a governance. I wouldn't even say performance and operating, because that is really for the team to manage, but to say more of a governance and steering.
Let me come in here. Contemplated is that whilst we may have this configuration of 4 and 3, in the spirit of partnership, as we have done with all our JVs, whether it was New York Life or we took our healthcare business, we are known for basically operating in the spirit of equal partnership.
Right.
part of the overall construct, there will be what's called a shareholder forum. And in this particular forum, there will be representatives from Axis Bank and MFS. And all key decisions, whether it is to do with people, business plan, CapEx, capital management, all of that, this will all be first discussed in that particular forum and then brought to the board. So that's how we are planning to collaboratively work on the JV.
One just quick bookkeeping question. So after everything is settled, like after the mystery shop and after Max is coming in, the current Max Financial's shareholders, so they will be holding 54.7% of Max, right?
Yes.
Oh, perfect, sir. Thanks. That's fine.
Thank you. The next question is from the line of Madhukar Ladha from HDFC Securities. Please go ahead.
Hi everyone. Congratulations on this deal. I just had a couple of questions. Number one, you mentioned that the book value is tax adjusted. Can you give us what is the tax adjusted book value as of December 19?
Okay, so I'll tell you the tax adjusted book value as of not just December, whatever December or March. It's in the range of 28-29 rupees. Now that tax adjusted book value typically moves up with profits. However, could fluctuate outside of the profits because of mark to market of your bonds. And that's the biggest sort of driver which can swing it this way or that way. Because I recollect, having discussed the number of, having this number. So forget the past, but practically that's the number today, and it could move depending on how the profits accrue and how the mark to market of the bonds bond yield happens.
Got it. Second, I'm assuming then the current buyback arrangement with Axis is suspended.
Yes, absolutely. I mean,
yes.
There's no point of doing that anymore. The current arrangements will get suspended after this transaction comes in play. Obviously, there is another 1% put, for example, which will, in a way, materialize before this transaction, is done. So to that extent, that 1% will get bought. But after which there is a 29% which will go, and so the last 1% will get cancelled.
Understood.
And we have the cash reserves for the 1% which we have to do.
Yes. Okay. Then you clearly stated what one of the promoters, Mr. Amanjeet Singh and family, were kind of trying to do with their stake. But I don't think you really elaborated on what Sumitomo's intentions are. Now they have a stake in the holding company, and they will also be selling 5% stake to the holding company. So what are their plans?
I don't know how familiar you are with Japanese companies. But to give you a short answer to this question, Mitsui Sumitomo is here for the long term.
Okay.
Let's leave it up.
And also, I want to just say one more thing, which was not said, and so that we're all sure. When we talk about monetization of the family's stake, and part monetization actually, we are not talking about, the state coming into the market through block deals and all of that. It will be a private transaction. So to that extent, I just want to sort of clarify that you should not have a liquidity overhang in your mind somewhere that this stock will come in the market or something like that. And Mohit had said there is a long queue waiting to get in as soon as we announce this transaction. So we will obviously have to, start engaging with the potential partners who will want to, look at this stake and, participate in the future growth? Yeah, sorry.
So, from what we know, I think a lot of guys had kind of circled the wagons in the past, and this wagon would actually come and stop on just one item, and that one item is this particular item, which we have now eradicated, hopefully, and not going to be discussed for future negotiations.
Right. Then, just on, what sort of regulatory approvals are still pending on this? I understand that we are pretty close to getting RBI's approval. Can you like throw some color of there?
All regulatory approvals are pending. In fact, we have not even applied for the transaction. But for the Mitsui Sumitomo transaction, those we have already applied to Department of Economic Affairs. I think CCI has to go now through the fast track methodology, which they have, where they can do that. We applied to IRDA. Questions have come. Questions have been addressed. So that's moving along fine. As far as the mother transaction is concerned, which is the active one, we just closed it, wee hours of the morning today. And we, in the course of, a week or so, we would be applying to CCI, IRDA, Reserve Bank of India. And so, early days to say how long these are going to take. But we are hopeful that end to end, we should be completing this towards year end. Calendar year.
When should the share swap with Mitsui get done, and then
so that should take me to the transition. Yeah, so that should happen. That should happen earlier than the crystallization or the closing of the activity.
So, what is the indicative timeline on that?
Now COVID has come into the picture. We were hoping that this would be done by June, but give or take a couple of months, I suppose.
Yeah, I think, Mohit, if I may, I think the Department of Economic Affairs is the only approval which typically should take time because, frankly, like Mohit said, with IRDA we are done. With CCI, we are fast track, so it's maybe about a week, 10 days or so. If our application under the fast track is admitted, which I believe the meeting was to happen today only. So if they admit that application, then I think it's about a week, 10-day process. So that will get done pretty soon. Now, Department of Economic Affairs also, they've had their query list sent to us. We've responded to all the queries, and I haven't heard after that. So practically, it could be, whilst we all anticipate it to be a June event, it could surprise us on the other side also, like while Mohit said that it could get delayed, but it could actually could be a situation wherein you may get all the approvals by May itself, so we don't know at this stage.
Right. Help me understand, the number which was sort of floating in the press is about 1,600 crores. And for a 30% stake, so that values the company at 5,700 crores odd, Max Life, whereas Max Financial with 93% stake with current market price would be at roughly like 17,000 odd crores of market cap. So isn't this a sweet deal for Axis? And how am I thinking? What am I not missing over here, or what is the catch? Or
I don't think so there's a catch, and practically, you have to look at value not in terms of rupees crores, and you have to not look at value in terms of what's being paid. What you have to also look at is that, when the third largest private bank comes as a partner, it's a different ballgame. That is one thing. Second is that if that partnership removes the overhang, in terms of the gap which has been sort of perceived in the minds of the investors, in terms of only one sort of missing piece in the overall Max Life strategy, which is to say that we are not owned by a bank like many of our other competitors. Otherwise, if you look at any vector, Max Life outperforms pretty much practically every player in the industry. You know, I mean, just to give you a little bit of recency in terms of performance. I mean, for example, in the month of March, you know, you saw this whole COVID situation playing out, and you know, we've all seen the numbers for March coming out. Max Life is pretty much second to none, except for one, and there also, you know, and that player had a slow March last year. So, you know, it's more of a base effect. So practically, in all difficult times, we've seen Max Life performing better than the others. It has the most balanced product mix. It has the least amount of risk when it comes to sustainability of their profitability, because, you know, a lot of players have a very heavy focus on, you know, some of these products which are susceptible to regulatory action. You know, Max Life doesn't have any of that. But despite all of that, you know, rather than trading at pretty much top multiple, if I was to just say, it has traded at the lowest multiple. You know what I mean? So now, having sorted this partnership, you know, and having given, you know, having sorted this uncertainty, and we then are looking at you know, at Max Life being looked upon as a life insurance player, which is second to none, you know, in terms of the quality of business which Prashant and team, you know, run. And in fact, we were having a little bit of scenario analysis conversation, and maybe Prashant can throw a little bit more light on it, that we have done exceptionally well in COVID. Our agency has, you know, has been the least in terms of degrowth. In fact, our incoming partners have hit ball out of the court in terms of being the number one bank insurance player in the month of March. You know, our digital channel is growing very sharply and not, you know, and not degrowing or registering a small growth. But I'll let Prashant talk a little bit more about it. So the point being made is that, you know, all this good work is not generating or not resulting in the value which it should result for our shareholders. Now, having sorted this lacuna or gap in the overall, you know, piece of, you know, in overall strategic piece for Max Life, we see a significant amount of value being created and unlocked for our shareholders. So I don't really want to compare with what price we are today trading at or what price at which we are selling. I think the value in this partnership and relationship is far more than the value being possibly put on the table to cement this relationship.
Actually, you know, if I could just, you know, give you a small little, you know, a summary of this. Assume for a minute that we did not do a deal with Axis, and assume that you have reached 2021-22, right? And the banker arrangement is now kind of nebulous. What do you think would have happened to the company? That's one scenario, right? Where more than 50% of your sales is coming from one distribution channel, which is Axis. And now you extrapolate that scenario to the current scenario. And I'm sure, you know, you will get your answers in terms of whether it's sweet deal or who is it a sweet deal for. So I leave it to you to decide that. But Prashant, over to you if you have anything further to add on this question.
Thank you. Thank you, Mohit. I think the way to see this is, you know, it creates win-win for everybody. I can first of all speak for Max Life as a platform. All the good things that Jatin talked about, you know, we are a distinguished, we are a very differentiated insurance company. However, the place for a large distributor it has to be understood in the context of financial services, and with this relationship, hopefully, you know, we have a cemented partnership over a long period of time, which will continue to accrue value to us as a franchise, and it will build a platform for our future growth. Now, we also must keep in mind that having a robust platform like this creates far more avenues and opportunities for the management team to focus on different areas and get growth from other elements. We have mentioned multiple times that we are focused on driving our own channels. Now, having segmented, this partnership or relationship over a long period of time and having the discussion with Yes Bank extended and 5 years extension, the management team and company is well set now to focus on expanding our own channels and going, beyond, what was possible earlier. And, of course, that will start to show up the numbers. From Axis Bank's perspective, of course, they get, shares in, one of the distinguished companies or differentiated companies, and it is going to accrue value to them. So if you look at it, it's a sweet deal for just about everybody, the holders of Axis Financial. It is a sweet deal, and we just managed to, or we hopefully will manage to unlock the value which is lying in the franchise, which will get passed on to all the participants. So it is going to just benefit everything. From, I think Jatin talked a lot, but suffices to say that we continue to operate with a lot of confidence under COVID situation. Also, there is a well-laid plan that we are executing to. We are seeing reasonable growth, reasonable, performance under the current circumstances, and there is a very well-laid strategy for a short period of time when the lockdown continues, and of course, there is a long-term strategy that we are going to remain focused on. At a very high level, of course, COVID is causing a stress, but we're managing that by completely digitizing over a, record period, digitizing the entire machinery, entire sales process, by driving significant amount of protection. Hopefully, that will yield, positive impact on our margins. Being extremely focused on our costs with a roadmap on how we will manage, the expenses over a short and long period of time, looking at structural cost reduction, as well as focusing on imagining how our fulfillment will look like in the current context. So there is a lot of work currently happening, which I'm sure will position Max Life to remain one of the market leaders and will benefit over a long period of time. So overall, the performance is intact. We're just, working very hard to make sure that we gain market share, we remain one of the market leaders.
Thank you. I would request Ms. Ladha to come back in queue for follow-up questions. Again, we would remind participants, please limit your question to 2 at a time. Thank you. The next question is from the line of Udit Kariwala from Ambit Capital. Please go ahead.
Hello, am I audible?
Yeah. Yes.
Yeah. So the question I had was that, we've discussed enough about the merger. One thing which I wanted to know is, if this deal goes through, operationally, how does things change with Axis? So till now, they were a partner and a large part of their business was coming from Max. So in terms of some numbers or some sense as to how operationally things would change if this deal goes through, any increase in commitment of business or something around those parameters, if you could give any color, that will be helpful.
So what I can tell you is that, look, assume that they are also a promoter, right? Just like we are. And I have kind of talked a little bit in terms of our governance, how we plan to work together, the shareholder forum, etc. And my belief is, having interacted with their very professional team, that they will be quite actively involved in the business, and all critical key decisions will be co-created, discussed, and mutually agreed upon, and disseminated to management. So that is how I perceive this joint venture to operate going forward. But Prashant, if you want to add some color, there's no numbers to give you right now, but if there's anything else you want to add to what I just said.
Very healthy relationship. I mean, as you know, the bank currently follows the model of open architecture. However, Max Life continues to have upwards of 90% share, or 93% share of the total counter. And once the bank becomes a promoter, I will have no reasons to believe that it will go down. So, I'll continue to remain optimistic that, Max Life Insurance will be the largest beneficiary very very substantial beneficiary of the bancassurance sales from Axis Bank.
So, I mean, where I'm coming from is that we saw that Axis had done another deal, and you rightly mentioned about the open architecture where they've partnered with one of the other private insurers. So, I mean, it's just kind of trying to get some sense around that, right? Because because most of the banks, once they become, they are promoted, they typically kind of push their subsidiary kind of products. So that's what I was alluding to.
Actually, that's the question you should actually ask Axis. Our belief is that, intuitively, if you are a promoter, you own 30% in a company, then, you're not going to be, shoving us under a truck there, right? So, but best to ask that question of Axis and see what they have to say.
Okay. Thank you. Yeah.
Thank you. The next question is from the line of Nitakshi Punga from L&T Infrastructure Finance. Please go ahead.
Thanks for the opportunity and congratulations on the deal. I just wanted to ask more on the lines of utilization of the money that's going to come in from Axis. I know you've mentioned about the Mitsui buyout as well as the tax scheme. But over and above that, can you shed some light on how the funds are going to be utilized?
Mohit, if I may. See, for now, for now, at this stage, we have no plans to sort of, in terms of, if your question is that is there a dividend in foresight and all of that, at this stage, we have no plans for any of that. But obviously, at the right time, we will think through some of these, think through, what our requirements are and then take a call, because, we are still, given the regulatory process, maybe 6 months away, maybe 9 months away from closure. So I think it's a very premature question at this stage. One hasn't, one has, have had a sleepless nights to get to this point. So at this stage, we'll enjoy the moment and then, think through what we need to do with the cash 9 months from now.
Sure.
Thank you. The next question is from the line of Devang Patel from Trust Wealth. Please go ahead.
Sir, are there any covenants in the deal structure that put a cap on how much Axis Bank can hold in either Max Life or Max Financial? So if they want to, increase their stake to majority, is there a roadmap?
So under the Banking Act, there is a section called Section 19(2). And this is our understanding of the Banking Act. Of course, we don't run a bank. There is a cap of 30% for a bank to own in a life insurance company. In a simple way. Now, in the past, your question obviously will be to say what happened when ICICI started, or when, for that matter, let's say SBI started. At that stage, this interpretation was not very clear, because the carve out to go beyond 30% is only in an indemnity-based business, whereas life insurance is not an indemnity-based business. Now, what one hearing lately is that view in RBI is almost certain that interpretation was not the right interpretation at that point in time. And the interpretation is that a bank cannot own more than 30% of the life insurance company under the Banking Act. So to that extent, that's the maximum at this stage. Given what I just said, what Axis Bank can own. Now, what happens in the future or not, we don't know. I mean, frankly, how will regulator look at this issue 5 years down the line, 10 years down the line, nobody knows.
Sir, and the board sharing of 4 and 3 seats, for how long does that continue? Because Axis Bank will have the largest stake after a merger.
Correct. So once the merger happens, and I think Mohit mentioned in his opening remarks that the board will get readjusted based on the shareholding. Whilst the JV still continues whilst the merged entity still continues as a joint venture in terms of, Mr. Singh depending on, the family shareholding being the joint venture partner for Axis Bank, directly as opposed to Max Financial being the partner. But obviously, since his shareholding on a diluted basis will be much lower than what Axis Bank's shareholding is, so given that, in that construct, clearly Axis Bank will have a significantly higher number of directors relative to what the family will have in the merged entity, given their shareholding.
Right. Thank you so much.
Welcome.
Thank you. The next question is from the line of Dikshit Doshi from Whitestone Financial. Please go ahead.
Hello. Thanks for the opportunity. Just one question. Is there a clarity regarding the merger ratio? I mean, how much Axis Bank will be holding post the merger?
Well, there is, I don't think so there's any sort of clarity required here or any confusion because, practically what one said is that whatever assets and liabilities are there in the holding company will have to be pulled out. So it has to be something called a composite scheme, wherein you demerge the asset liabilities into another, let's say, group entity, and have a Max Financial as a shell company. And that shell will merge into Max Life. So practically, only the Max Financial shareholders will get the shares in the merge co. There is nothing which changes for Axis Bank. They will continue to hold their 30%. So the effect of that merger will be that the shareholders of Max Financial will become direct shareholders of Max Life.
Okay. So Axis will continue to hold 30% in Max Financial.
No, in Max Life, the merged entity.
Yeah. Oh, sorry, merged entity. Okay.
Yes.
Thank you. The next question is from the line of Harish Toshniwal from Premji Invest. Please go ahead.
Hi, sir. This is Rashid here. One question. So, in the current structure, since Axis becomes the majority owner, the largest owner, and simultaneously they will be having seats on the board, you think that this can form as a control and the point where RBI might have some might need more clarity or might need to think about. So, is the line of thought relevant?
Well, at this stage, it's not conceived as a control, like we discussed, because, Max Financial will have one board seat more than Axis Bank, and it's a 70-30 partnership. So now, what happens in the future post the merger is not something which anybody can sort of, at this stage, sort of say what RBI will take a view at that point in time or not. But at this stage, this transaction is not structured as a control transaction, so there is no control passing on, and therefore we don't anticipate any such issues arising with RBI.
Okay. And another question, sir. So since practically because of the RBI regulations, 30% becomes the maximum which Axis Bank will be able to hold, you think that the structure will be a very competitive open architecture, despite being the promoters, the structure will always be more skewed towards a very stiff and competitive outlook at Axis Bank channel?
See, let me put it in a very simple fashion. When it comes to, let's say, open architecture or having, different partners in terms of as part of your overall distribution network, practically what you get is compensation, right? Because there are commissions under the law which get paid and when you sell a policy. However, here, there will be 30% owners and possibly the single largest owners in the future of this business. So now there is that much more value which is accruing to you as a bank, being a shareholder. So to that extent, sort of reasonably one wouldn't expect any meaningful or let's say any notable share to go to any other partner but to Max Life of that business, is how I would sort of put it.
Okay. Okay, got it, sir, and congratulations. Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of HR Gala from Finvest Advisors. Please go ahead.
Yeah, I just wanted to know, have you filed this merger document with the authorities?
No, we said in the opening remarks it's a 12 to 18 months event. Not now.
Okay, within 12 to 18 months.
Yeah, because we have to first close the transaction, then we have to close the Mitsui buyout, and then we get on with the merger. So it's a 12 to 18 months event.
So what will happen post merger is that entire Max Financial Services will get merged into the Max Life, correct?
Correct.
Okay, that is what likely to happen. Now, as a result of it, somewhere in some answer you said that the Axis Bank stake will go up. Will it go up beyond 30% after merger?
No, it cannot. So I just clarified that about two questions back, that all the Max Financial shareholders will participate in the 70% shareholding of Max Life, and Axis Bank ownership will remain at 30%.
Okay, fine. Thank you very much. Wish you all the best.
Thank you.
Thank you. The next question is from the line of Puneet Pariwala from Morgan Stanley. Please go ahead.
Yeah, hi everyone. Congrats on the deal.
Hi, Joseph. How are you? Yeah. Thank you.
Hi, Prashant. So, Prashant, just wanted to understand, the partnership is like almost 10 years old and you would have extracted a lot of synergies. But now that the tie-up becomes much more strategic and of a long-term nature, are there something additional synergies that you can generate from a 3-5 year perspective, which was missing so far and can now be better extracted?
Prashant? I don't know, maybe we've lost Prashant. Amrit, are you there?
Sumit, hi Sumit, can you please repeat one more time the question?
Yeah. Sorry. Prashant, the question is that what is your expectation of synergies over the next 3 to 5 years now that Axis Bank becomes a shareholder?
Oh, absolutely. A lot of synergies, actually. So far our relationship, while, we always called it strategic, it was more, tactical value share, year on year, giving stake and buying back. Now from there, it converts into them becoming solid set of shareholders who are vested, participating in governance, participating in developing of business plans, as well as their value actually accruing out of the business growth. So from that perspective, I think definitely going to have, that trajectory we continue to maintain.
Sure. And secondly, on the dividend payout policy, will there be a change? Because now, historically, Max Life has been but that probably will not be required going forward. So in that context, will there be a change in dividend payout policy and the solvency requirement and capital requirement for Max Life?
Yes, we are going to review that. Actually, and you actually pointed out that the dividend policy was aligned to our requirement to buy back from Axis Bank. So, with that compulsion actually going away, we will review our dividend policy. But I would like to highlight that Max Life is a growing organization, and we are touching our solvency ratio is close to about 407%. So if we continue to grow with the pace that we are growing, anyway, our ability actually to distribute dividends for next 2 to 3 years is going to be limited. We may end up requiring more capital, which we, over next 2 to 3 years, we will do it either by raising it or our own, profits. But suffices to say that level of dividends that we were paying earlier is going to be supreme.
Question on the reverse merger, will there be any tax implication on the shareholders of reverse merger, of the merger of Max Financial and Max Life?
It's a tax neutral merger.
Okay.
So it will be designed to be tax neutral.
Okay. Thanks a lot.
Thank you. The next question is on the line of Pratik Kotter from Nippon India Mutual Fund. Please go ahead.
So yeah, all my questions are answered. Thank you so much.
Thank you. The next question is from the line of Ritesh Vora from Mission Holdings. Please go ahead.
So, sir, is it 30% buyout? Does it mean you have to give any open offer?
Oh, it is in the unlisted company. Unlisted company. So there is no acquisition of shares in the listed company. So there is no opening.
But it is getting merged, right? That is happening afterwards, is it?
Yeah, that will happen from 12 to 18 months from now. It's not at this stage.
Okay, sir. Thank you very much.
Thank you.
Thank you. The next question from the line of Hussain Lattawala from Narpal Securities. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. I just have one question. Did the shareholder of MFSL post the merger will get the share of Axis Bank? Hello?
We can't hear you. Please go ahead.
Hello? Yeah. Hello?
Yeah, go ahead, please.
Go ahead, please. So I wanted to ask that whether the shareholder of MFSL post the merger will get the share of Axis Bank?
So the shareholder of MFSL will get shares of Max Life, not Axis Bank.
Okay, Max Life.
Yeah.
Oh, thank you, sir.
Thank you. The next question is from the line of Narottam Kaur from Trust Investment. Please go ahead.
Hi, congratulations on the deal. Just wanted to ask that here it appears that Axis has two options. One is the swap up option and one is the put option. So first, the swap up option, what kind of valuation does it happen? Is it like just 30% from Max and
there is practically hold like that. So therefore, whether merger happens or swap happens, it's straight sort of the shareholding moving up.
Okay, so instead of holding,
30% may not be because you still want to hold something in Max Life. So whatever they swap up, they could swap up to that percentage.
Oh. Is so if let's say they first, and this is a hypothetical scenario, but if the first option, they refuse the put option, or is the second?
There is no concept of refusal. We have to practically file for the merger. We have to understand also that what the best interest of Axis Bank. What's in the best interest of Axis Bank is what's in the best interest of Max Financial shareholders. Because practically, if the merger happens, they become the single largest shareholder of a directly listed life insurance company, which is what the desire of the Max Financial shareholders also is. So to that extent, they will always want to merge. And swap is really that backup option because practically, if you really think about it, in a life insurance business, your shares get locked in for 5 years. Mm-hmm. So when you come in as a promoter, so the swap option, possibly unless and until we get a waiver from the regulator, will become alive 5 years from now. So if they really want to do, if they really want to be in that position, which is where they could get to, then merger is really the option.
Mm-hmm.
In the near term.
Swap is the option that becomes exercisable if the merger doesn't go through, right?
Correct.
And then the last option is the put option, right?
Exercisable independently, but practically firstly they cannot swap for 5 years because of the IRDA lock-in. It's under the insurance act that there is a 5-year lock-in, so it's not that there's any other interpretation which can be taken of that item. So to that extent, once they have within those 5 years, the only option is a merger option. Now, if we haven't been able to deliver merger for 5 years, then obviously, they will want to swap to come into the liquidity situation.
And it is up to their discretion whether they want to swap or to put the options to you. Is that fair?
No. So they can only put if they have exercised the swap.
And okay. Because once they exercise the swap, then they get the Max Financial shares, right?
Correct. Then once they get the shares and they're in a listed company, even if they want to exit or monetize partly, that's a better option for them.
Okay, so the put option is only for a limited number of matches.
Put option is a deterrent, that in a way, in any construct you will have certain events to say that, for example, we want Max to sort of get a merger done or a swap done, those kind of things. Otherwise, somewhere in the overall, life of the relationship, we could possibly choose to exercise another option, which will then ensure that our first two options are delivered to us. That's how you typically do some of these things. But not to say that, and that's why we said, it's not to their desire or it's not in their interest to exercise the put. And we've given rationale for why it would make sense to exercise that put.
Okay. So I mean, just also add here that, one, you talked about the fact that this is going to be sequential. It is a waterfall. There's merger, failing which it is swap, and then it is a put. Now, Justin's talked about really this being a deterrent. Now, there's one more lever which is available, and that is that in order for either the merger or the swap actually happens, you also need the concurrence of the majority shareholders. So as part of this deal construct, we also have to, we also got Victory, who is the major shareholder, to actually adhere to it through a deed of adherence. So they will support both these items. So really it is like a deterrent which Justin has spoken about.
Understood. Thank you so much. Thank you.
Thank you. We'll take one last question from the line of Shiv Chanani, an individual investor. Please go ahead.
Hi. Thanks for the opportunity and congratulations on the transaction. Just wanted to understand, post this deal and let's say post the merger, when Axis Bank actually becomes 30% shareholder in hopefully the listed Max Life. Are there any thoughts around rebranding as, like a Max Axis or something like that?
For now, there isn't. So the arrangement is that, like I said, the name of the company will be Max Life as it is today. However, there will be an amendment to the tagline, which is currently there. And that amendment includes the inclusion of the Axis Bank name as well as their logo, which will be prominently displayed. So very clearly, he's talking about a joint venture between Max Group and Axis Bank. So that will be there.
Right, fair enough. And just one more question. Let's say, in whatever 1%, 5% probability of the merger actually not going through, what prevents Max Financial from giving out shares of Max Life to all the shareholders of Max Financial?
Again, a very good question. I think there is a
thesis on this.
Yeah. So there is obviously, firstly, there will be a dividend tax leakage for all the shareholders, so which is obviously a financial implication. But to say that, let's say, and we'll obviously weigh all our options, and therefore it's not an option which is not somewhere in the table. It's not part of the deal, but it's a possibility which is there, but it has implication in terms of dividend tax leakage. So we'll have to weigh everything when we come out with some, come out with the final structure, in the sense that, the preferred option is the merger, followed by the swap, and followed by, any other option.
Yeah, I do understand the dividend part of it. I'm just trying to understand, is there anything else? Because the dividend is a one-time.
What you said is absolutely right. It's not that it's not a possibility. It wasn't a possibility, because of the tax amnesty scheme previously. It is very much a possibility today, but that possibility has a cost attached to it. So we'll figure out at the right time, which way to go.
Fair enough. And if I may just squeeze in one last question. in terms of, let's say, again, in the eventuality of the merger of Max Life and Max Financial, clearly Axis Bank becomes the largest shareholder at 30%. So while you mentioned that, there is an RBI limit in terms of 30% holding for insurance company, but I'm just trying to understand, is there a conflict between the SEBI and the RBI? Because SEBI might want that it's an indirect 30% holding in a listed company for Axis Bank, and hence they may, insist on an open offer.
No, not really, because, practically if you think about it, New York Life was a joint venture. The Sumitomo is a joint venture today.
Sure.
So I don't see why Axis Bank should be perceived differently.
Yeah, have you sought a clarification from SEBI on this?
Well, it's in the unlisted company, so there is no clarification required. It's not that the company to that extent only has the life insurance business, it also has a shared services vertical. So, practically the only business in the company.
Yeah, the question will arise only in the eventuality of a merger. Fair enough. Fine.
Merger does not trigger change of control, as you know.
Okay.
Okay. So thank you. Since this was the last question, Mohit, over to you.
Is that the last question?
That's what I heard the moderator say.
Yes, sir.
Okay.
We have one question in queue. It's a follow-up, unless you want to take that as well.
Yeah, let's take it.
All right. Thank you. The next question is a follow-up from the line of Madhukar Ladha from HDFC Securities. Please go ahead.
Just a follow-up, sir. The put option, is there a time limit until which it can be exercised? So the 63 months after the transaction, and up to when is the put option alive?
See, the thing is that, like I said, the swap is a precondition to the put. So if they have not exercised the swap, then obviously they cannot exercise the put. And if they exercise the swap, then swap will get done if it gets done from the trade today. So to that extent, there is not a real risk in terms of the put, like I said. Well, it's there, like we spoke about it, as a deterrent.
But there's no time limit until which the put expires or something.
No, if they haven't exercised the swap right, then put automatically expires.
Okay. All right. Thank you.
Thank you, ladies and gentlemen. That was the last question. I now hand the conference over to Mr. Mohit Talwar for closing comments.
Thank you, and I thought this was a very rich and quite an invigorating session we had. Lots of great questions, and I do hope that we have been able to kind of address whatever questions you all had adequately. If there's anyone who wants to reach us separately, if there's something we have not addressed, please feel free to do so. So with that, I kind of bring this session to an end, and thank you very much for joining us again.
Thank you. On behalf of Max Financial Services Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.